Welcome back to the channel. It is Friday, January 30th, 2026, and we are witnessing a significant shift in global sentiment today. The bulls have hit a wall. Over the last 24 hours, a perfect storm of disappointing big tech earnings, a steadfast Fed, and pre-budget nervousness has triggered a wave of profit-taking. Today, we are breaking this down into three critical sections: the US market, the Indian market, and the global market reaction. Let's start where the tremor began: Wall Street. Thursday's session ended with a sea of red, driven by a massive rotation out of technology stocks. The Dow Jones closed down 0.2%. The S&P 500 retreated from its 7,000-point historic touch, closing down 0.86%. And the Nasdaq composite took the hardest hit, plunging nearly 2%. What triggered the sell-off? First, Microsoft. The stock suffered its worst single-day drop in years, tumbling roughly 10% despite beating estimates. The street was spooked by slowing cloud growth, signaling that the AI monetization timeline might be longer than priced in. This dragged down the entire software sector. On the flip side, Meta Platforms surged nearly 10% on strong earnings, acting as a lone bright spot, but it wasn't enough to save the broader tech index. The second hit came from the federal holding rate steady at 3.5 to 3.75% was expected, but Powell's commentary was not what the bulls wanted. He emphasized that uncertainty is elevated. This higher-for-longer stance gave traders the perfect excuse to book profits on expensive tech valuations. Shifting focus to India, volatility has spiked. After a strong rally, the bears took control today ahead of the union budget on February 1st. The Nifty 50 has slipped below the crucial 25,300 zone, trading down roughly 170 points. The Sensex also shed over 600 points in early trade. Selling wasn't uniform. Indian IT giants took a hit following the Nasdaq rout. Metals like Tata Steel also saw sharp cuts due to global demand concerns. The big talking point is the economic survey. It projects real GDP growth of up to 7.2%, reaffirming India as the fastest-growing major economy. But the market shrugged off this good news, choosing to focus on immediate global headwinds and foreign investors turning net sellers again. Finally, widening the lens to global markets and crypto. Risk-off sentiment is clearly visible across Europe and Asia, with tech and luxury stocks dragging indexes down. Bitcoin is facing pressure, dipping into the $88,000 range. With a massive options expiry today, the max pain price is acting as a magnet for price action. To wrap up, we are in a risk-off environment. For Indian investors, the next 48 hours are critical. Stay nimble, and I will see you on budget day.